The Taj Mahal is considered by many to be the most beautiful building in the world. Private placement life insurance is considered by many to be the best asset structure available to wealthy families today. At EWP Financial, we build our asset structures like the Taj Mahal. How do we do this? In several ways. By turning complexity into simplicity. By putting your needs first. By creating for you an exceptional team of advisors. We are unveiling our new series, PPLI and EWP, Comprehensive Case Studies. Join us as we dive into EWP Financial's unparalleled expertise in PPLI asset structuring across global jurisdictions. Discover the power of PPLI's unmatched adaptability, tailored to thrive in diverse financial landscapes. As New York City gears up for the November 2025 mayoral election, Democratic frontrunner Zohran Mamdani's bold tax proposals on millionaires and corporations are sparking debates on wealth preservation. With a stunning primary win over Andrew Cuomo in June 2025, Mamdani's platform targets high net worth individuals to fund free childcare, affordable housing, and city-run grocery stores. For high net worth individuals like the Legrands, split between U.S. green card holders and Swiss tax residents holding U.S. stocks, bonds, real estate, and fine arts, rising New York City taxes could erode their portfolios. Enter private placement life insurance, a powerful tool for tax deferral, asset protection, privacy, and simplified reporting.
Zohran Mamdani's 2025 tax proposals. How PPLI protects HNW families from NYC wealth taxes. Who are the Legrands? A global HNW family facing NYC tax risks. The Legrand family boasts over $100 million in assets, blending U.S. and European roots. U.S.-based green card holders, treated as full tax residents, own NYC commercial real estate, brokerage accounts with dividend-paying stocks and bonds, and a fine art collection valued at $20 million. Their Zurich-based relatives, Swiss tax residents, and non-U.S. persons mirror these holdings with U.S. situs investments vulnerable to federal estate taxes and potential NYC income flows. With Mamdani polling strongly as of September 2025, fears of wealth flight are rising among NYC's elite. The Legrands seek strategies to protect against proposed surcharges that could hit 2% on million-dollar incomes and hike corporate rates, directly impacting their investment returns and business interests. Zohran Mamdani's 2025 NYC tax proposals, key threats to HNW investors. Zohran Mamdani, a Democratic Socialist and New York State Assembly member, won the Democratic primary on June 24, 2025, positioning him as the likely next mayor. His campaign, detailed on zohranfornik.com, zohranfornik.com, emphasizes taxing the rich to make NYC affordable. Endorsed by Governor Kathy Hochul despite backlash, Mamdani's revenue plan projects $9 to $10 billion annually for social programs. Here's a breakdown of proposals affecting HNW families. Millionaire income tax surcharge. Details: a flat 2% hike on incomes over $1 million for the top 1% of earners, raising $4 billion yearly. Impact on HNW. Targets investment income from stocks, bonds, and real estate rentals, core Legrand assets. Could add $200,000 plus in taxes for a $10 million earner. Funding use. Free universal childcare, ages 6 weeks, 5 years. Free bus service, and tripling affordable housing, 200,000 units in 10 years. Corporate tax increase. On details, raise NYC's rate to 11.5%, matching New Jersey, for all firms doing business in the city, generating $5 billion. Impact on HNW. Hits dividends from corporate-held stocks and pass-through entities. Indirect burden on family offices or real estate LLCs. Funding use. City-owned grocery stores, property tax exempt, mental health crisis response, and gun violence prevention. Wealth tax endorsement and property tax shifts. Details. Mamdani backs a Zohran-style wealth levy, akin to proposals by Elizabeth Warren, focusing on high earners rather than net worth. Property taxes may shift to richer neighborhoods, increasing levies on luxury real estate and art storage. Impact on HNW. Potential audits on fine art and real estate valuations. Estate exposure for U.S. situs assets. Criticisms. Business leaders warn of capital exodus, echoing past high-tax eras. Implementation needs state approval. These 2025 proposals, if enacted, could trigger asset sales, capital gains taxes, and relocation costs for families like the Legrands. Critics, including Forbes analysts, question if they'll save or sink NYC. What is private placement life insurance, PPLI? A primer for HNW tax planning. Private placement life insurance, PPLI, is a bespoke variable universal life policy for HNW clients. Minimum premium, $5 million. Issued by offshore carriers like those in Bermuda, it lets policyholders allocate cash value to alternative investments, hedge funds, private equity, direct real estate, or even fine art funds without triggering immediate taxes. Unlike retail policies, PPLI offers low fees, under 1%, and customization, making it ideal for international families. For the Legrands, transferring U.S. stocks, bonds, properties, and art into a PPLI wrapper defers taxes while enabling growth. How PPLI shields U.S. green card holders from Mamdani's taxes. U.S. tax residents face federal, up to 37%, state, up to 10.9%, and NYC, 3.876% rates, plus Mamdani's proposed add-ons. PPLI provides tax-deferred growth. Internal gains on stocks, bonds, and real estate income grow tax-free, dodging the 2% millionaire surcharge and corporate dividend hits. Tax-free liquidity and death benefits. Borrow against the policy at low rates, no income recognition. Heirs receive proceeds free of estate taxes, NY rate, 16% over $6.94 million. Wealth tax buffer. Offshore PPLI may exclude policy value from NYC wealth levies, as it's not direct asset ownership. Example, a Legrand green card holder shifts $10 million in NYC real estate to PPLI. Annual rental income $500,000 compounds tax deferred, saving $100,000 in proposed surcharges yearly. PPLI benefits for Swiss tax residents, avoiding U.S. estate traps. Non-U.S. persons like the Zurich Legrands owe 40% U.S. estate tax on U.S. situs assets over $60,000, no spousal deduction. PPLI counters this. Non-U.S. situs protection. The policy itself evades estate tax. Underlying U.S. assets, stocks, art, held via dedicated funds remain invested. Income deferral. No U.S. withholding on growth. Swiss lump sum taxation may apply only on withdrawals. NYC ripple effects. Shields rental income from corporate tax hikes passed through investments. Example, $15 million in U.S. bonds and art in PPLI avoids $6 million estate tax hit, preserving wealth for heirs. Beyond taxes, top PPLI benefits for asset protection, privacy, and reporting. PPLI isn't just a tax hack, it's a fortress for HNW families amid Mamdani's tax-the-rich push. Asset protection, creditor-proof under Bermuda Cayman laws. Shields from lawsuits or NYC property disputes. Protects fine art from valuation challenges and wealth audits. Privacy. No public disclosure of holdings, confidential ownership. Keeps family wealth out of media scrutiny during election fervor. Simplified reporting avoids IRS Form 1099s, FATIA, for non-U.S. assets. One annual policy statement. Eases compliance for cross-border portfolios versus separate brokerage real estate filings. Conclusion. Secure your HNW legacy with PPLI against 2025 NYC tax changes. Zohran Mamdani's 2025 proposals promise progressive change, but risk accelerating wealth migration from NYC. For global HNW families like the Legrands, PPLI delivers unmatched tax shielding, protection, privacy, and efficiency, ensuring Mamdani can't tax my PPLI.
For a complete explanation on how this question pertains to your own unique investment situation, please contact us directly by phone or by email. The opinions expressed in this video are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual on any financial structure, investment, or insurance product.